What is up, YouTube? Thank you. Welcome back. This will be episode 2 of our Robinhood Investment Challenge and financial education, basically. What little education I'll provide, because I don't have a whole lot myself, so I'll provide what I can. Just a quick recap. Last one, we talked about how we started this off, basically to show that even with a very small amount, personally, I started with a $30 investment in the Robinhood app. Again, that's just the one that I use personally. That's the one that I'll talk about. It's the one I'm most knowledgeable on. There are other ones out there that you can look up other videos on. There's a million of them out there. M1 Finance, TD Ameritrade, Charles Schwab. Um, Charles Schwab actually just recently in the last 2 weeks, I talked about that a little bit on the last one again, went to free trading, which is what Robinhood originated, was the no commission, no trade fees app. So now kind of everybody's in the game now with that one. So everybody's kind of starting to put in their own little touches to try to compete with each other. Right after Charles Schwab came out and said they were going to do free trades, which was a blow to Robinhood, Robinhood came right back and said, hey, you know what? We're going to offer a cash management, which most of the other accounts have. Some of them you can get in a Roth IRA. Some of them have like debit and credit cards. Like basically they're like bank accounts that you can set up through those. So now Charles Schwab came back the following week with another rebuttal and said, hey, we're going to allow fractional shares. A lot of people get really upset. I mean, from everything I've read, you can again watch a lot of videos on YouTube here regarding the Robinhood app, and that's the biggest complaint about the Robinhood app is that they don't offer the ability to purchase fractional shares. Honestly, that's like one of my least concerns. Um, if you really want to know something, like this is really super nitpicky too, but if you want to know my big complaint with the Robinhood app, and I've yet to hear anyone else talk about this. They can talk about how Robinhood doesn't have fractional shares. Until recently, which it hasn't actually rolled out yet. It's just announced, and you can sign like a pre-sign up for the cash management. Um, they don't have a lot of the advanced charting available on there. But my biggest complaint, uh, if I buy a share, let's say Ford is started the day off selling for $9.50 a share. It drops down to $9.25. I go in, I buy that share at $9.25. My screen turns red saying that I'm at a loss for the day because it doesn't factor that you bought it less than it started the day out with. So it's not until the following day that you're in the green on that Ford or whatever stock you bought. That's my little nitpicky thing because I just hate seeing that red screen when I bought in and it dipped. So, I did something right where I basically got a good investment going now because I struck at the right time, but it makes it look like I had a terrible play there. I guess that'd be my complaint. So, moving on, we want to try to ramble a lot less. Our target with our $30 initial investment was to double that by the end of month one. As I mentioned in the last video, we did do that. Currently, at the end of a month and a week, basically a month and a week, I have, I'm about 20 cents away from tripling that investment. So, excuse me, not tripling. We've already tripled, quadruple. We quadrupled that investment. And that wasn't all just because of that $30 initial investment. Some of that had to do with, as I share the information, someone uses my referral link to sign up for Robinhood account. They get a free stock. I get a free stock. So depending on what that stock is, that's bumped me up also. I've done very well with that. So that's where a pretty good chunk of some of that stuff had come from. So those referrals are great because that's basically like instead of you having to put 5 or 10 or $20 in there to keep your account growing and growing and growing a little bit more, and giving you the ability to buy some of those higher value stocks. I mean, that's basically like Robinhood handing you the money to do that. So definitely a huge positive on that one. My new target by the end of this month, which as long as things keep going well, is to be at $130 from that initial $30 investment. I would like to max out on my referrals by Thanksgiving. That's my goal for the referrals. That way I'm strictly from that point on just, relying on my skills and abilities that I'm learning, and, making the right investments. Just some ups and downs I've had along the way. Everything was going really well. I'm not confident enough. Really, I've had some really good plays. I've got in and out of some really good positions, and like until I can establish a good pattern, I'm going to chalk it up to beginner's luck. Maybe I've just got some natural ability at doing this, but I'm told that I have an obsessive personality, that I don't just get into something, that I look into every aspect of whatever I'm involved in, whether it's at my job or a television show that I'm watching, that I just get very obsessed with it and I have to find out every possible detail about it. Kind of been the same thing with this. I didn't just go in, throw my $30 in and say, let's hope for the best. I mean, I spent a good portion of 2 weeks researching the app before I signed up for that. The 2 stocks that I bought starting out, I had researched I did as much research as I possibly could on those before I chose my 2 stocks that I initially started with. I've changed my strategy. I think it's foolish if you find you're making mistakes, and that's not just in investing, that's in anything in life. If you just keep repeating that same pattern over and over again, or to just completely commit to something that's not working, is not wise. You have to be able to roll with the punches and adapt and overcome, and that's what I did. Because initially I started out thinking I was going to buy these 2 stocks that are doing really well, that were showing good growth, good steady growth, slow growth, but good steady growth, and that my $30 was going to grow overnight. And then I sat there and it was like, wow, this just doesn't work. So I kind of had to change up my strategy. I had a little bit left over because I put my $30 in. The 2 stocks that I bought, they left me about $2 of buying power, because they only one was a $16 stock and one was 10 and some change. So ended up with, I think I had about $280 to start with. So what I started doing, which ended up kind of being my strategy, was I just left those 2 stocks sit, plus the free one I got from Robinhood. The free one I got from Robinhood is a company called Douyu, D-O-Y-U. I believe it's a Chinese online learning company. I was actually going to dump that pretty quickly when I got it, because I didn't know anything about it. It looked like something that wasn't going to last for a long time, but it actually kept going up. So I hung on to it, and that's where I came into one of my first big mistakes. Is I sat on that stock where it started off over $9 when I got it from Robinhood, and then when I finally sold it, it had dropped down to like $8.20 or $8.30, and it finally started to go back up. So I was like, I'm going to get rid of it, because I can't sit here and watch this thing jump all over the place like that, because it wasn't going back up to where I initially got it for. After that, I just held on to those 2 stocks that I started with. One of them was actually a dividend stock, which we can use that as our vocab. Word of the day. Dividend stocks are ones that basically pay you to own the stock. Ford is a good example of that. I mean, most of the bigger companies pay a dividend. Most of them are quarterly. There are some out there that pay a monthly dividend. There's what's called an ex-dividend date. That's the date you have to have bought the stock before that date. Basically, that's where it locks in that you're on record as having owned that stock, so that they can pay you that share. Even if you sell it, a couple days after, you still get that dividend that they pay out. Most of them, like the one that I have, it paid out a 25-cent dividend which it's growing very well. So I was really happy with that. So basically, every quarter, that one is a set dividend where it pays out a quarter. Some of them are a percentage. I'll probably dedicate another video talking a little bit more about that, but we'll move on because we don't want this to get too long. But basically, I was going to let these stocks sit there and grow. Uh, but I also wanted to buy some more stocks. I wanted to be able to have more than just one of a stock, you know. So what I did is I took that $4, $3.50, whatever I had left, and started doing swing trading, which is where you buy a stock, hang on to it for a short period of time, whether it's a day or a week, until you see it go up, and then you sell, get out of it, and go into your next position. I did that for a while, made some really strong gains with that. But then that's where I started getting burned on some things. The one thing I didn't look into that I should have were the different types of trades. I was doing market buys, which is, as I talked in the last video, our word of the day was the limit order, which is basically you're saying I won't pay more than this amount for the stock. If you do a market buy and it jumps, so you might try to buy it for $20. You hit market buy, in that couple seconds it takes you to enter everything in, that stock price might jump 5 cents. So now you're basically 5 cents in the hole, because that was a gain you could have had if you had done a limit order and locked that in, that you were only going to pay for it if it was at $20. So I got burned on that a little bit, not looking into those details of the different types of orders. So I honestly can't even tell you the last time I did a market buy. I always do the limit buys and like a trailing order. But yeah, we made some mistakes. We adapted. We've gotten to where I've actually, as I bought and sold stocks, I just left them wherever they were at on my watch list. Now I've actually moved them around, so my focus goes right to what I'm looking at that particular time. So all of my stocks that are long-term investments, I have at the top of my list, so I can just scroll right past those. I'll check now and again to see how they're doing, if they moved up or down. Next on the list are my swing trades that I'm going to hang on to for a day, 2 days, whatever, and then try to get out of them and make a profit. And then the last thing that I have on my watch list are stocks that I'm looking at for day trading. The thing with day trading, which is where you buy and sell on the same trading day, you are limited to 3 per week. If you go over 3, you're hit with what's called the pattern day trading rule, which, to be a day trader, you're supposed to have $25,000 cash or in your account, basically, that you can use at any time. On Robinhood, I don't know if the other apps are the same, but on Robinhood, if you hit that 4th day trade in a basically 5-day trading period, it'll kind of lock out your account for a month where you can't really do anything, which would kind of suck if you've got some stuff that you needed to get out of. That's, again, something we can talk about. Be a good topic for another video. So basically now, after some trials and tribulations and a few harsh burns where I lost, there were a couple stocks before I learned that about the limit buy, where I just didn't get in time. That, I was trying to get something for $5.99, and it jumped up to $6.05 by the time I did a market buy, because it was on a move. So I lost there, or I didn't have $6.05. I only had $6 of buying power at the time, so I didn't get the stock, and then all of a sudden it jumped way up. I had one yesterday. I've been watching this stock for a while. It always starts out about the same price. Like it'll start off the trading day at $1. Like freaking clockwork. Every day it starts off at $1. It'll jump up to about $1.03. It'll drop back down, usually about $1 or 99 cents. And then again, wherever it ends up, start of the next day, it's at $1. So I lucked out. I got it on a low point. Sold it the next day. It did exactly what it always does. It, jumps up that 3 or 4 cents or 5 cents. So I got a few shares. I think I bought 5 shares of that stock. So I made a little bit, and those pennies count. I mean, don't get caught up thinking, oh, I've got to make these trades where I'm making $5 and $6 at a time. Those little pennies count, because those little pennies add up, and you can throw those into your long-term stocks then, and just, have that set amount that I'm going to keep $5, I'm going to keep $10, $15 as I build up that I'm going to use to do my day trades or my swing trades, and the rest of it I'm going to, kind of put over here to save up to buy one of these bigger stocks. So don't think you have to make a huge gain. I mean, grab 15 cents off of this trade, 20 cents off of this, a dollar off of this one. And that's kind of what I did there. But where I left a little bit of money on the table, this particular day it had another jump where, using our dollar example, I bought it at 99 cents. It jumped up to the $1.03. That's usually where it tops out at. It flatlined for a long time. So I sold all 5 of my stocks that I had bought, sitting here celebrating my profit. All of a sudden it goes, within 20 minutes, it went from that $1.03 up to $1.09. It sat there at $1.09 for about 15 minutes, and then boom, right back down to that dollar where it normally is. So I mean, you leave some money on the table. You can't get hung up on that. Got to have a strong stomach because your portfolio is going to drop. I had one day where, beginning of October, everybody kind of got hit there. That's when they first started talking about this, recession business. Yeah, I took it pretty big. It was pretty gut wrenching. I mean, when you're with a small amount and you lose 15%, man, that hurts. And it looks like some stocks that you really had a lot of faith in just died, and they've all rebounded since then. Obviously, because we've quadrupled where we were at. Some of the successes I've had, like I said, I've gotten into some real low and made a huge chunk. The knowledge I've gained, like I said, I'm just learning learning how to read the charts, learning about all these different companies. I'm up on current events. I didn't used to pay too much attention to current events. Now you have to, because any silly little thing out there can affect your stocks, or it can affect your particular one. I learned about making sure to diversify your portfolio. One thing that they recommend, a lot of the experts, is that you don't keep more than basically 5% of your portfolio tied up in one genre. Like if you invest in a lot of financial, like banks, you shouldn't have more than 5% of your portfolio invested in banks. But when you're dealing with these smaller numbers, like for example, the first stock that I bought, like I said, I started with $30. The first stock I bought was $16.20. Obviously, that's way over 5%. Now I'm starting to kind of get those down, and as things grow, and I go and grab some of these and grab some of this and grab some of this, I'm getting those percentages down. So that one's a little bit harder where we're starting at with these lower dollar amounts. But the one thing you want to do is make sure you have that diversity in your portfolio, that you don't have all real estate companies or all automotive industries. That way, if something does take a hit in the automotive, you're not going to tank on all of your stocks. You might lose a little bit here, but these might go up, or you can slide a little bit over here into one of these other industries. So make sure you diversify. Learning that kind of stuff. Learn about the different types of trades, like I said. I'm trying to wrap this up here because we're pretty long. We're about 4 minutes already longer than the last one, and I know that's a lot of time to invest on something as dry as this. New videos. My plan is to post on Monday or Tuesday, which will be the how my previous week ended. I'll get all my information gathered at the end of the trading days on Fridays. Put that together over the weekend. Get you a new video. Tell you how the week ended up, where we're at starting off the new week, and then we'll do another one about midweek, Wednesday, Thursday, somewhere in there. Probably more like Thursday, Friday. That way, it kind of tells you how those first few days of trading went in the week, what we're looking at doing going into the end of the week, how our investments are doing. That'll be the plan. In between there, if we come up with some different categories, like if we want to talk about some dividend stocks or something, we might do like a quick little 5-minute video, 6-minute video. Silly, but the idea I was throwing around is to call them like Robinhood stingers or just Cody stingers or something goofy, where we'll just spend a few minutes talking about a certain category. So that's kind of what we're looking at. They'll pretty much be laid out on, I'll have to come up with that, but don't really have how we're going to lay them out, but I want to try to kind of like have a nice flow instead of rambling on. Kind of jotted some notes down this time instead of just going off the top of my head. That way we had a little bit more structure. Hopefully it worked. I mean, obviously we went a lot longer, but I feel like we were a lot more structured this time. Just to kind of end the video, I did want to let you know where we're at. Again, at the end of our first week of trading, we ended up at $39.45. Now at the end of basically our fifth week, we are up to, what is it, $119.84. So I made a couple of questionable trades right at the last hour between like 3:30 and 4 o'clock. A couple of penny stocks that I was looking at that I thought I could make a little bit off a swing trade dropped down, and I ended up buying those. Otherwise, we would have easily ended the day over 120 the way everything was going. I know some of you were asking. I know we specifically had one gentleman, thank you, in the comments on my update video that was asking about my portfolio. So kind of give you a screenshot of that. If you have questions, what I'll do is I will put what all these stocks are down in the description, how many shares I have of each. One thing I want to kind of discourage you from doing, a lot of times if you watch some of these YouTube videos where people discuss their portfolios, you'll see down in the comments everybody jumps in, oh, he's doing great. I want to copy that portfolio. That is very dangerous. You have to look at when they got in and out of those positions. For example, I have one, which is the first one that I had, that I said I got for $16.20. It went down a little bit today. Actually, I was able to buy another share of that today at the exact same price, $16.20, because it had a pretty significant drop today. It was up over $17. Now I think it ended the day at $16.37. So I bought that at $16.20. You're watching this video, it might be back over $17. So you don't necessarily want to copy my portfolio. One, I'm not a financial expert. Like I said, I feel like I'm succeeding off of this stuff on blind luck. I don't feel like I've got that skill and ability yet to where I can say that, hey, everything went to plan and that's how I did it. So be very careful. Watch where people are getting in and out of position. So don't just blindly copy someone's portfolio. It's not bad if you use some. So the ones I just showed you were my day or my long-term and swing trades. Most of these ones down here at the bottom, trying to not get the glare, but also get the names for you. Again, they're real hard to see and it doesn't want to focus. I apologize for that. These are more of my swing and day trades here towards the bottom. Like I said, I'll list off exactly what I have and how many shares of each I currently own. A lot of these I'll try to dump Monday or Tuesday. Like I said, those bottom ones are swing trades. I did promise that I would talk a couple minutes about the recession and my thoughts on the recession, whether or not with the prediction coming out that there will be a recession here in the next year. Is this a bad time to get into the stock market? Absolutely not. I don't think it is. You're still going to have. I don't know if a recession hits, if you're necessarily going to see those strong bull runs like we are now, but you're going to still see those dips and valleys. Where if you're doing swing trading, you can still get in low, sell at a high. The long-term stocks. There's some safer bets out there. A lot of information out there where you can find that. My thing that I'm kind of going to now is I'm actually keeping less money for my day and swing trades and starting to look at more long-term investments, more of those. I mean, obviously at this level, we can't afford the big blue chip stocks right now, which are those solid, most of them are dividend paying, consistent. Typically, even in a recession, are going to have growth. We can't afford those yet, but what we can do is do our due diligence and research and find those stocks that are going to stay strong and not drop too much. I'm actually looking more into dividend stocks, where that wasn't really a priority to me. Now it is, where I'm trying to move more into dividend stocks, where I'm hoping in then maybe 6 months' time, I'm starting to get payouts every month of the year. And that's just, again, another way to grow your portfolio. And the way I look at that, like my stock that I bought for $16.20, it pays out a quarter. So I know that stock has to drop more than 25 cents before I lose money. And I'm getting paid that quarter 4 times a year. So in essence, it would have to drop an entire dollar and stay there before I'm losing money on that. So I mean, that's just one way you got to kind of look at that. Is look at those ones that are going to give you that return. Um, and that's my strategy moving forward, is trying to move more into some more into the long terms, increase my amount of shares in those long terms, look more at the dividend side of things. Um, Again, that's a whole nother category we could spend 25 minutes on, like we are now. But I just wanted to touch on that, kind of my thoughts on that recession that's upcoming and what my strategy is going to be going forward. And you don't have to follow that. I am not a financial advisor. I'm not a financial expert. Um, take what I say with a grain of salt. Again, do your research on it. Don't just take my word for it, because I'm new to this. Like I just know what I've read, and I could be reading the completely wrong thing. I could be watching completely the wrong videos. Hopefully not, but you don't know. It's the internet, man. Things are crazy. Things are crazy. It's not always truthful out there. So stay tuned. Like I said, expect kind of your end of the week updates on Monday, Tuesday. Those midweek on Thursday, Friday ish, and the stingers in between. Otherwise, make sure you subscribe. Thank you for those of you that are. Hit that like button. Everybody knows YouTube's got their wonderful algorithm. It's hard to find my videos right now. Actually, the first time I tried to search for one of my videos myself, I couldn't even find my name. So now you can actually search for the name, that chef icon. So please like, share, subscribe, tell all your friends about it. Let's blow this up. Let's make this challenge crazy. Let's get as many people in there. Tell me in the comments how you're doing on your challenge. Even if it's not on Robinhood, if it's an M1 account, if it's an E-Trade account, a Webull account, go for it, man. Hit me up in the comments. Let me know how you're doing. Otherwise, you have a wonderful weekend, and we will see you next week. Thank you.